There we go. So, good morning. I hope everybody's all right. I'll start by, very briefly going over what we've had so far today, which isn't a lot, admittedly. So far today we've had trade balance from Australia, which was slightly better. That's not going to move the markets. By the way, trade balances, just for historical reasons, I'm going to mention that trade balances used to move quite a lot the FX markets in the past, when people actually paid attention to real economics and not what central banks are going to decide they want to do. Nowadays, of course, trade balances are not even, noticed, right? People don't pay close attention to them, although the day will come that they will be paying close attention to them again. Anyhow, other than that, we had German factory orders which came in negative, less negative than expected, but still negative. That tells you a lot, right? We got construction PMIs out of Germany, deeply negative contractionary territory. We got contraction in construction PMIs from the UK, right? Previous number was 52.6. Anything above 50 is expansion. Anything below 50 is contraction, right? That's how PMIs work. The expectations was for a slowdown to 52. The actual number came in at 48.9. So that came in a lot worse than expected. B, as I said, in contractionary territory, right? We got 10-year auction in Spain that came in less than the previous one because we've seen, of course, a pullback in yields came just below 2%, and that's more or less. Now, as the vast majority of you know, we do have the BOE in what is it, 1.5 hours from now? Yes, I think it's 1.5 hours from now, where the BOE is expected to raise rates from 125%, from 125 basis points, that is, that they currently are, to 175 basis points to 175%. So that's rather imminent. The number was gonna come out, before we have our F.A.C.E webinar. Keep that in mind. Then we have initial jobless later on, and that's going to be during the F.A.C.E webinar. We have initial jobless claims and trade balance out of the US. The only reason why the trade balance is going to be rather important in this case is mostly for GDP reasons, right? A worsening of the trade balance is going to have a negative effect in expectations for third quarter GDP. Other than that, as I said before, the markets are not going to react to that. And we also have Canadian building permits and trade balance at the same time with initial jobless claims, right? So that's, hey, got sore hands today if I'm not too typey. I paid a mortgage with 15% rates, 1990. These interest rates levels are a joke. Yes, they are a joke, Arif. They are a joke, and they are completely artificial, right? That's the truth. They are completely artificial. If or when central banks will let the market find a proper equilibrium, as you understand, interest rates are going to be significantly higher than this. These are completely artificial interest rates. They're the result of central banks monetizing government debt, right? If you take them out of the equation, then rates will raise significantly, and we're going to easily surpass these interest rates you're talking about, because current inflation is higher than the inflation we got when you actually got that loan. Yeah, of course, governments won't take responsibility for anything. That's what politicians do, right? They don't take responsibility, and they try not to solve problems if they can be postponed for the future. That's the huge problem with the political cycle, right? Which is the root of all evil, right? Politicians have a short-term time horizon because their number one priority is getting re-elected, while the real problems and the real solutions for a proper functioning economy and a proper functioning society are long-term. But nobody wants to take short-term pain for long-term gain because, as I said before, their goals are not long-term. Their goals are short-term. Right? Their goals are maximum 4 years away at the day of election, and then, of course, that time horizon decreases as the election time comes closer. The next election time comes closer. That's how it is. There's already starting to lay blame at BOE for inflation here in UK. And to be honest, listen, central banks are super responsible for many of today's economic problems, right? They are directly responsible for some of them and indirectly responsible for many of them. Why? Because the politicization, probably that's not the right word. I guess as a Greek, I can say it as I want since it's a Greek word. Politikopeis is the actual Greek word, by the way, just for the record, of central banks has made governments a lot more irresponsible, right? Because when you know that you can run big deficits because there is somebody that's going to be monetizing them, of course, you are a lot more likely to do so. And just a reminder, because I keep note of all these things. Do you remember how strong the rhetoric about the modern monetary theory was up to COVID, up to the first year of COVID? You remember that they were actually cultivating everybody, the environment. They were preparing the ground, right, for modern monetary theory because it was a very easy solution. As you've seen, most likely, every buzz around modern monetary theory has now disappeared. Why? Because we did try again, because modern monetary theory, as if you remember those that follow for a long period of time, I've been saying that for years. Modern monetary theory, has nothing modern to it. It's a failed experiment that have been tried multiple times in the past in several countries, and the results have always been the same: catastrophic failure, um, hyperinflationary results. Why nobody's talking about modern monetary theory anymore? Because practically, we didn't say so, but we used modern monetary theory during COVID to alleviate the pain, not from COVID, but from the policies that were followed during COVID. The lockdowns, the suspension of productive activity, so on and so forth, right? What was the result of modern monetary theory? Extremely high inflation. And imagine we used it for a very limited period of time, right? So modern monetary theory just disappeared now because proponents and everybody that was a proponent of modern monetary theory, it's like communism, right? Proponents of communism or of modern monetary theory, I'm not implying it's the same, but it has something common between people that believe in it, can be of two kinds: A, hypocrites; B, people that are completely oblivious to reality, right, and don't understand basic economics. So we tried it with, the reason being all the policies around COVID and not wanting people to feel the pain from all the COVID policies, right? I'm not judging COVID policies having to do with the medical part, right? I'm definitely not a COVID denier. Um, I do think the policies that were followed were at a huge part wrong. They might have been, they might have been, they might have had, you know, uh, good intentions, but you know how it is with good intentions, right? The road to hell is paved with good intentions. So we tried it and we got 10% inflation practically, right? Reported inflation. So modern monetary theory just, vanished into thin air. I'm pretty sure that within my lifespan, we might hear of it again because people tend to circle around. Yeah, reported exactly. Wasn't it by design, the lockdown thing? No, I don't think it was by design. It was the easy solution. Once again, I think it was the result of politicians, as always, doing the wrong thing for the wrong reasons, right? For example, I saw that each country was following more or less what other countries were doing. And in my opinion, it had to do a lot with politicians not wanting to be liable for deaths, meaning they didn't want to have their opponents tell them, why didn't you try what Germans tried? Why didn't you try what French tried? You know what I mean? So everybody was copying each other. So at least if things went wrong and they asked them in an interview, they can be, listen, we didn't reinvent the wheel. We did the exact same thing that Germans did, that French people did, that X did, blah, blah, blah. And all those are, great working countries. So why do you blame us for what happened, right? We did what others did. So, it began by overreacting to it because at the beginning there were a lot of unknowns about COVID. So the very, very initial lockdown, in my opinion, was probably the right policy for a very short period of time, right? Locking down perhaps for like 2, 3, 4 weeks until we get a lot more medical data does make sense, right? But everything that followed that, in my opinion, was, a lot more catastrophic than helpful. It was like that in the 50 states. We got 15 different ways of looking at it. A few states did nothing almost, and they turned out well. Yes, same thing happened with Sweden, right? I remember, and I'm going to go back to markets, right? Because, we're getting out of the conversation now. I remember that when Sweden had a much more loose policy than anybody else at the very beginning, and they started, the death count started raising. I remember that Sweden had reached 5,000 dead people, and we here in Greece, with an equivalent population, had something like 100. And everybody was like, "Oh, you see, blah blah blah." And I began telling everybody that, listen, don't count the death toll today. Let's count the death toll in a year from now, right? Because in my opinion, it's very likely that what they're doing is going to prove to be the right thing to do. Like a year and a half later, Greece had, after having gone through 3 lockdowns, I've lost count or whatever, 3 full lockdowns, and then, huge restrictions, etc., had double the death toll of Sweden. At some point, it was literally double the death toll. So, that tells you all you need to know. Anyhow, back to the markets. What have we had since yesterday that is worth noting? I'm going to start with a cable, not because it has done something worth noting, but because it's probably about to start moving shortly, right? For the time being, cable seems to be riding this channel trend line resistance. It's actually above it. It's riding it as support, right? And if I had to look at this price action in isolation and completely ignore the fact that in less than 1 hour and 15 minutes, we have market moving news, I would assume that this is probably some kind of a little bull flag forming here. So let's see if the result of the BOE is actually going to be, you know, in the direction of what technicals more or less point to here. Needless to say, you know, the beginning of another leg to the upside is going to be a very bullish development, and it's going to open, in my opinion, quite a lot more upside for the cable. I would, in this case, look for cable to eventually reach this previous high here at 126.70. Right. So nothing much has happened to the cable, but I'm starting from there since we have, as I said before, market moving news coming out soon. Now, what else have we had? If you remember, we had the conversation. We had the conversation about on F.A.C.E. For those of you that were on F.A.C.E. yesterday, we had the conversation about what will be happening here with risk assets, and we talked specifically about the S&P. If you remember, all of us practically agreed, all of us had the same opinion that the S&P will probably thrust higher at least one more time. We talked about 4,200. Why 4,200? Because it was that congestion highs over there. To be more exact, that's at 4,205, right? So if we want to be exact with the number, it's 4,204, 4,205. As we also, it's a little bit of a technical similarity here, although there is not much of a relationship, as we also were riding for 3 days the broken channel trendline resistance as support, exactly as it's happening now with the cable, right? We had barely broken above, we were riding the channel trendline resistance as support for 2-3 days, and yesterday we had an up day, and we actually, you know, put some distance behind us, between us and the trend line support. So next upside target here at 4205, that might, you know, produce some kind of a reaction, although in the short term, in my opinion, the S&P still looks constructive. And of course, you know, I'm always focusing on the S&P because it's the broader index, and it is the best index to use as a representative for risk assets in general, right? Now, what else is worth talking about? In my opinion, silver, right? Despite the evening star formation we had the day before yesterday, it produced some follow through yesterday up to some point in the day, and then it reversed higher, and it actually closed positive on the day. We have another positive day today, almost 1% higher. And if we continue like this, the recent price action is going to point more to a bullish consolidation just below this confluence of resistances at 2030, roughly 2030. So will point to further upside. Now, gold, rather similar, looks even more bullish because gold is currently actually trading higher than any of the recent days closing high, right? And is still on its way to the descending channel trend line resistance. Of course, the closer we get to this descending channel trend line resistance, the worse the risk reward becomes to be long. In fact, there already is no risk reward to be long since we're getting closer and closer to this channel. Now we break through this channel, in my opinion, the chances that we've actually found a low, the low in gold increase substantially, right? Now notice, if we look at the other metals, notice that you know, they don't look the same because they don't have the same characteristics. For example, palladium is an industrial metal a lot more than gold is, a lot more than silver as well, although silver is an industrial metal as well, right? Gold is as well, but I mean at a much lower extent than used in other things, right? Palladium in a remains in a broader choppy consolidation, although in my opinion it's probably on its way higher. Platinum, though, does resemble a lot more gold and silver, as you see, right? Platinum held this long-term descending channel strong line support and is moving higher. Now, having to do with crude, and then I'm going to switch back to FX. Having to do with crude, notice how we have probably broken down, right? If you remember, I kept saying again and again that in my opinion, it's inescapable to actually break down and head towards 85. So yesterday at some point we were higher on the day, we reversed lower, we closed near the lows of the day, and in my opinion, the next significant area of support is at 85, right? So keep looking lower. Now, going back to FX, two comments here. One, the DXY is holding the big reversal we saw the day before yesterday, right? Big outside long white candle. So for the time being, that low remains technically significant, right? It's very hard to make an argument to be short the DXY as long as we trade above, let's say, 105.30. And having to do with USD yen, the same thing remains here, although, and I wanted to show this, let me manage to grab this and I'll move this back. Actually, we don't even, yeah, we do need it actually. I'm going to use it as an extension. So, notice how the USD yen is backtesting these previous ranges, trend line support as resistance. So 134.50 resistance, and from a risk reward perspective, an attempt to be short, even for a short-term trade, doesn't look bad here, right? A reminder, we have completed 2 days ago the ascending wedges target, so 131.50 remains key support, right? But we're currently testing resistance, so there is no risk reward at the moment to be long against 131.50. We go back closer to 131.50, you can attempt to do so. But in my opinion, if there is one trade now in a USD yen, for those of you that like to trade shorter term, is probably being short, right? And practically this is a confluence of supports. The 50 DMA is also there, right? Let me also draw this resistance zone. There it is. So USD yen, definitely one that's in my radar for today, right? And watch carefully this zone, 131.50 to 134.50, right? It's an important range now. Cool, because I did the short. Okay, good. I think it's a good risk reward trade. That doesn't mean it's going to necessarily work out. Nothing is 100% in trading. The only thing we can manage is the risk reward, and in my opinion, the risk reward is really looking good in this case, because if you're wrong, you get to lose very few pips. If you're right, you have a you have a very, very decent return you can get, because we can easily turn back and back test 131.50 in my opinion. Let me see what else I wanted to talk about. Aussie, Kiwi, etc. They're just consolidating their prior move lower. So in essence, they might also be consolidating the recent gains in general, right? In the same way we saw silver do, but let's give it a few more days of price action, right? And other than that, nothing really significant has transpired since yesterday. Yesterday was, in general, a rather quiet day in the markets, right? So it's not that necessarily we have too many things to talk about on a daily basis. Some days we have more movement and more things to talk about. Some days it will have to be less. In any case, that's a wrap up of what I wanted to talk about today. I'll be more than happy if you have any requests, like something specific you want me to look at. I'll be more than happy to do so before we wrap it up. Steve CL is getting interesting. Hope it gets to 82. Okay, I just saw that comment, Arif, but I already went over it. I think, I don't know if it's going to get to 82, but 85, 85, I think is going to be a magnet. So let's first get to 85 and we take it from there. Might be good to give a closer look at cable. Listen, if by closer look you mean having a look at it in a shorter term time frame, I have no problem doing that. Here's the cable on the 4-hour chart. Let me draw things for you here. Let me update this chart because in general, you know, I only look at 4-hour charts and I update them every few days. I actually look at them only when, you know, I'm looking for a trigger, etc. Otherwise, I'm focused on the daily, right? Because I'm a swing trader. I'm not trading very short term, right? And you can look at this trend line, resistance, right? We've already broken through it. Or you can take a look at this one, which is the one I have on the daily, more or less, right? And look at what I'm talking about. So this can be either, now the bullish case scenario is that this is some kind of a triangle forming here, right? With an eventual development like this, right? So that's how it looks to me, more or less. And as I said before, I would be, now, if you want shorter term targets here, right? First one, 123.20. The next one is going to be 144. Not 144, 124, right? That high we got over there. So shorter term targets are these two. I gave you the longer term target on the daily. But for the time being, this looks to me constructive. Of course, somebody can make the argument here that, oh, you know, I'm looking at this chart and all I'm seeing is a little head and shoulders formation in the making. Yeah, all that is fine and good, but in general, as I've explained in the past, a lot of wannabe head and shoulders formations are actually triangles, right? That are continuation formations. And many times people get enthusiastic about potential head and shoulders formations when there is actually a triangle forming. So I tend to pay attention more to continuation patterns than reversal patterns. And I'm going to start paying attention to this as a head and shoulders formation if and only if and when we break through the neckline. Until then, I don't want to be looking at charts and with the mindset of trying to find reversals, because you're going to be more times wrong than right if you're looking at charts and look for reversals, right? Steve, okay, before that, we have a couple of comments and I'm going to go to your comment, Catherine. Okay, we have a question about the Aussie CAD and I'm going to be more than happy to have a look at it. It's been a few days since the last time I looked at it, but let's look at it together. So now, the bullish case scenario here is that we've broken out through this wedge and we're currently back testing the trend line resistance as support, right? Now, since there were only 2 points through these trend line passes, I tend to be skeptical with these trend lines, right? I want to always give them the chance to prove their worth to me. It wouldn't be the same, right, if price action was something like this, right, in the past, and this passed from another point as well, then I would put a lot more faith in this trend line, right? So if it was a trend line that already passed from 3 points, I would put a lot more faith to it. Now that it was passing through 2 points, yes, I draw it, right? But I want to give it the chance to prove that it's actually a viable trend line and not just a trend line passing through 2 points, because you can do that at, you know, at many occasions and with more or less arbitrary lines. So if we end up holding this 88.65 area, then it looks good for more upside, right? But only if. From a risk reward perspective, though, there is a trade here to the long side, just because the area I just talked about is very, very near, right? Take a look at the pound yen and the euro pound. Yes, absolutely. So, pound yen. Medium term to long term comment, bullish. Why? Because it has been within this ascending channel since the COVID sell-off lows, right? So looking at the big picture, you have to respect the upside. Now, shorter term comment. I had drawn this symmetrical triangle here. At some point, it looked like we were breaking down intraday, but we didn't. Look how on a daily closing basis, we kept respecting the symmetrical triangle. So as long as we're consolidating in this range, there is no short-term trend, but triangles are usually continuation formations. So I wouldn't be surprised if this is how things evolve from here, right? So as long as we're holding within the symmetrical triangle, short term you can be neutral, but in my opinion, there is a good chance that we're going to make another attack towards the channel trend line resistance. Now, having to do with euro pound, those of you that watch us frequently, you know that I'm actually rather bearish on it, since this rebound higher and the break through this longer term descending channels trend line resistance proved to be just a corrective move. We're currently scraping the bottom of this descending channel, and I have to admit that also the move lower doesn't have impulsive characteristics. So both the move higher was lacking impulsive characteristics, but so far also the move lower is lacking impulsive characteristics. So most likely, I think the best thing to do here is not have a position whatsoever. But in my opinion, if you look the longer term picture, euro pound doesn't look really healthy to me, right? I wouldn't be shorting it right on support, obviously, because in my opinion, you should never be shorting things on support, or you should never be buying things on resistance, right? Obvious. I mean, it's trading 101. But it doesn't look good to me for the time being. So yeah, I, put a gun to my head, I would be looking lower and not higher in euro pound. Steve, I'm watching CAD yen for a short rather than USD yen because of oil being bearish. Would appreciate your view. Not sure whether to wait for 105 or just short here at 104.50. Says Catherine. Catherine, I'm going to be more than happy to have a look at it. And let me pull it up for you. Here it is. So, two things here. One, look how we held the previous low, right? and this horizontal support resistance area in a rather impulsive break lower. But I would agree with you, and exactly as we talk about USD yen, I'm not convinced that this move lower is over and done. And there is some resistance here. Right. And it's the area you're talking about. Anywhere between 105, 105.30, right, is the resistance. So I wouldn't blame anybody for trying to be short there for another leg to the downside. Now, I'm not good at playing the game of finding the perfect level to enter at very short-term moves and short-term charts. I always found that extremely stressful. That's and a very hit and miss type of exercise. That's why my trading style is more of a swing trading, and that is why, because I don't want to lose a position just because of how many times have you heard Blake that is trading shorter term be like, guys, overnight I had put an entry, I had put a limit order at X level, let's say 105.13, and you know where the high of the day was at 105.08, right? I mean, and this of course happens to everybody that trades this way, right? So many times you're going to be unlucky and not be hit for like 5 pips, 10 pips. So you had the right idea, right, in mind. You had the proper plan in mind, but the market never did you the favor of giving you the exact level you were looking for. That is also why part of my trading style is I always scale in and scale out of positions. So if I was looking to take this rather shorter term trade here, I might already short like 1/3 of what I would want to short here, then short another third, let's say at 105, then short another third at 105.30, and then have a full position, right? With my stop loss being where my stop loss would be here and my target be where my target would be here. That's how I approach trades. If I can look at Euro Pound, yeah, I just did. Okay, Riff. Do you record sessions? Yes, they are recorded. All sessions are recorded, yes, and those that are broadcasted, you can then find them on YouTube as well. Okay, my pleasure, mate. Yeah, I know it happens frequently, Stephen. Yeah, sometimes, Bran, I might find myself not having a full position, right, this way. But I still have a position, right, instead of having no position. Okay, let me show you. So if you go to YouTube, you'll see, first of all, that many of our videos are in categories, right? But many times you'll have to go to live videos, right? Because this is a live broadcast. So you won't find them in the uploaded videos, you'll find them in the live broadcasts. Yes, the channel is ForexAnalytix, right? youtube.com/c/ForexAnalytix. Let me put that for you here. There you go. Okay, so thank you all for being here and for your participation. Don't forget, we have data in 50 minutes, and we have the F.A.C.E webinar in 1 hour and 50 minutes. So I hope I'm going to see you all there. Bye-bye.